Hi, David Moore with Equity Advantage, and today we're going to talk about what it takes to get started with a 1031 exchange. This process has been around, actually 1031's been around since the 20s, but we sort of got final guidelines in 1991, and it simplified the process a lot. But the biggest thing you have to remember anytime you look at or contemplate an exchange is that it has to be established before you have actual or constructive receipt of the funds. So what does that mean? If you close a deal, even if you've never touched the money, it's constructive receipt, you've got tax exposure. So you really got to make sure you take care of these things in advance. People ask me all the time when I'd like to see them think about the exchange, and I tell them, well, when they buy the property, because 9 times out of 10 you're going to sell the thing at some point, and if you don't buy it correctly, you won't be able to sell it either. So really understand ownership, how it impacts what you're doing. But the biggest thing with any transaction is before you ever go to sell it, understand what the tax liability is, decide whether you want to do an exchange, whether you want to pay that tax, whether it's the right time to pay that tax. But if you want to do an exchange, it has to be established prior to settlement. So what does that mean? What do we need to get this thing started? And it's really a simple process. Think of it this way. You're going to sell a property, you're going to buy a property, and we're going to step in the middle of the whole thing and turn it into an exchange. So how do we do that? We do that by having you assign the rights and obligations of ownership to us pre-settlement, and you're going to assign that purchase sale agreement to us. We actually assume all rights and obligations of you as a seller of the property. When it closes, we sign as a seller. You're going to sign things read and approved as the exchanger. And the deed actually, from 1991 on, the deed's just going to be direct deeded from you to the buyer of the property. But the exchange always remembers between you, the taxpayer, and the exchange company, not you and the buyer or you and the seller of the replacement property. Could you negotiate the purchase before the sale ever happens? Yes, you can. Go ahead and negotiate the purchase, do everything short of closing on it, and that's totally fine. We can once again draw that assignment agreement when it comes time to close that thing, move forward that way. If you had to close before the sale happens, well, that doesn't kill you either, as long as we're involved prior to the closing. So we can do what's called a reverse exchange if necessary. I always encourage people to look at that as a fallback, not a primary objective, and for a variety of reasons. But if we're looking at a basic delayed exchange, simply think of it this way. You're going to give us something, we've got to give you something back. What's given and received have to be of like kind. Like kind, very basic idea. It refers to the nature of the investment rather than the form. People call up all the time, say, well, I gave up a rental house, I have to receive a rental house. Not true. Give up the rental house, go out and buy an office building, strip mall, place at the beach, maybe even move into it someday. All those things are possible. For you to be totally tax deferred, you need to go across or up in value and equity. Finally, we have to have continuity vesting. That just means that the person or entity that gives us something has to be given something back. So as far as the process is concerned, what we need to know is we really just need to know your contact information, name, address, phone number, email address. We're going to need to know who's handling the closing, the escrow officer's name, escrow number, and a phone number. If you're in New York, someplace that works with lawyers closing the deal, get us that person's information. And if you don't have the escrow number, you can just get us the seller's or the buyer's name and the property address, and we can reference the transaction that way. At that point, we're actually going to reach out to escrow, get a copy of the purchase sale agreement, the title report. We're going to draw up our exchange agreement. It's going to be between you, the taxpayer, the exchanger, and Equity Advantage. We're going to draw up the assignment agreement, which actually allows us to do what we need to do. We're going to put escrow instructions together telling escrow what to do. And as I said before, really we're just being put on as a seller of the relinquished property, buyer of the replacement. You're going to sign read and approved as the exchanger. As soon as that property closes, as soon as we get final settlement statements, we're going to send out what we call an ID packet. The ID packet is going to give you the 45th and 180th days. It's going to give you the identification rules, and it's going to contain a form that's to be filled out, returned to us, fax it back, email it back, drive it back, whatever you need to do, get it to us prior to midnight the 45th day. And that's going to, there's 3 different identification rules. You only have to work with one of those. If you want details on that, You can look at one of our other videos or give me a call. But you take care of that identification. You can change your mind anytime up until that 45th day. So if you turned in one on day 10, that's fine. You can change your mind day 20, 30, 40. A common misunderstanding also is that, well, does a property have to be listed to be identified? And that's not at all needed. I mean, does a property have to be listed with someone to be purchased? Do you have to use a broker to buy or sell something? No, you don't. So whether it's on the market at the time of ID is really irrelevant. You've got to give what the government would deem an unambiguous description. You've got to receive substantially the same thing. If you are buying with other people, picking up less than half of it, you need to identify the portion you intend to be picking up. As far as the acquisition, earnest money on acquisition, as I said before, go ahead, put that down anytime. If you put and negotiate a purchase before the sale happens, that's totally fine. Let us know whether you want to be reimbursed the earnest money when we go to close on that property. If, on the other hand, we have funds, we can forward earnest money. If we have your funds, we can forward the earnest money on your behalf. We'll do that after we've put the assignment agreement together and had it signed by both you and the seller of the property. We can release those funds on your behalf. Escrow is going to be open as it normally would be, and then at closing, once again, we're going to be signing things as the exchanger or as the actual buyer. You're going to be signing things as the exchanger of that transaction. And at settlement, we're signing that way. You're reading and approving. Once again, the deed's going to go from that seller directly to you. And upon close of that, we're done with the exchange, assuming it's 1-to-1. Now, remember, you can give up one property by 1 or by 10. You could give up 10 by 1, but you've only got that total 180-day period to get things handled. So keep that in mind. That's the toughest thing. The 45-day actually is the toughest thing with the transaction. When we're all done with the acquisition of the replacement properties, we run out of time, get your deal completed, we're going to send out one last set of documents. It's a term pack which summarizes what was relinquished, what was received. It's going to give a full accounting for the funds, and you're going to give that information to your tax people along with settlement statements from the relinquished and replacement properties, and they'll do the tax work for you, doing the basis carry forward calculations, the 8824 form for reporting purposes. But if you look back at what happened, you sold a property or properties, you went out and bought the property or properties you wanted, and they don't have to all happen at the same time. You've got that 180-day window to get things done. If we do something like we call a blended transaction where we're combining a reverse and improvement, you can almost get up to a full year. But typically we're looking at that 180-day window to get things taken care of. But as always, I'm going to tell you the only dumb questions when you don't ask. If you got questions or concerns anytime on one of these transactions, please don't hesitate to reach out. Once again, David Moore with Equity Advantage, 1031exchange.com, and thank you for joining us today. I hope it's been helpful. Thank you.